Recording. Here we go. Now we go. Okay, good morning, everybody. Let me get through the disclaimers. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room and is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during this live session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. Having said all that, let me just say that some of the trades that I may take during, especially this session or other sessions to follow, I will clearly say that this is a trade that I would not normally take. It's the reasons why I don't like it. I may take the trades just to either prove or disprove my theories about why I should or should not take that particular trade. But just because I take a trade in the demo, and all the trades you see taken on this platform are in demo, and just be advised that sometimes I'm showing you trades, reasons why not to take a trade as well as why to take a trade, and I'll make that clear at the time. So, but anyway, right now we have a US yen. We had an alert back at 7 o'clock this morning. It took a while for it to play out, but it is starting to play out. I'm just about at my target here. It did give us a chance to get in just a few minutes ago. Here is where the alert was. Let me go and show you where the alert where it generated. I'll show you how I drew the wedge. Clear this all out. Let's see if I can spread this out a little bit. Here's where the alert was. It was at 7 o'clock this morning. It should be 7 o'clock. Yep, 7 o'clock. And one of the first things I look at is I look to see where my moving averages are. All my moving averages moving in the right direction, and which way do I suspect it's going to break? It was an ascending wedge. Now, at first, I took it all the way down from here and put my B all the way up here at the last pivot high. It was ascending, so I want to start with my A down at the bottom, move it up as close to where the alert was as possible. And then I don't really like the angle of this, but it was a significant part of where things were going. But I moved this, I marked the A. I marked the price of where this A was, and I just slid it up because I wanted to try and make this angle just a little bit shallower. And I think I moved it all the way up to about the bottom of this blue candle, because this was where the move started up. It came back down. This red candle came down with a long wick and retested this trend line, this point right here. So that gave us our anchor a hit, a near hit, and then a close hit. And then we were waiting for it to break out of the bottom. I'm going to go to my 1 minute chart where everything was sort of tuned up, and let me get my other chart up here. And this is my 1 minute. This is the chart that I went. And we came up, so here is the alert. I'm going to snug this over a little bit closer to the pivot. And you can see that where the alert was, it came right down and retested where my C was. And it did, you can see where it had a little bit of a break. It didn't close below. And we say, no, wait till it closes below before you take the trade. We had a nice strong pullback. And the bottom line is that we're looking for either for the price to sit between the bottom trend line and the upper trend line of the wedge. We could actually, as this thing progressed, you could see we had a little bit strong move down, came back up, pretty much a near same price. It came out just a little bit wrong, right, pretty much right at where the C was. It broke the C, but couldn't quite break it. It broke the trend line, but couldn't really break where the C point was. And it came back and retraced pretty strong. And then again, you're still inside the wedge. But you can also see where there's a little bit of a development where this pivot high came in, and when this low came in we had a lower high, a higher low, but then when this broke, that validated this, so I could use this for a trend line coming from the top. So that's where it's sort of like confining it down to the lower part of where this wedge was. So we're still looking for it to break out of the bottom. And then just before the session opened up, we had a nice move down, came across. This was the line where the C was. This is the line I want to see it close below, and it did right here on this blue candle. You can see where it respected this red trend line, came down pretty strong. At base, we had a blue candle or red candle, came down, just barely closed below the trend line, gave us a blue candle, and then a strong move down, which closed below this line where the C was. At that point, I took the trade short. My fill was right down here. I just did a market entry, and right now we're working on the targets. We're still trying to get our 7 pips out of this thing. And that's where we are right now. This was our little trend, our entry zone, where I try and find a 2 pip range from the bottom of the trend line to in parallel with the bottom of the wedge. And this was the zone where it came in. Like I said, the reason why I took this trade where it did, off this blue, where I marked the blue arrow, was because we had basing just right at the wedge, and it came down and it closed right below the C. We actually got it closed below that C, where that was the lowest close we had since that C formed before the alert. And right now we're just following this thing on down, trying to get our pips out of this thing. And this would be the 7 pip range, I believe. It should be 7 pips. Take profit of 7. Just make that 7. I'm not sure why I got hit up 69, but that's what we're looking for. And so right now the profit from the entry to where this thing started, we're right now at about almost 5 pips. So anytime from this point on, you can pretty much take your profit, which coming down towards this, we have a blue fib line right about where our target is, I believe. Yeah, right. It just crossed the blue fib line. And I'm out of this trade. And it's still going. Any questions about how we entered that? And I'm sorry, it didn't wait until we got into this, into our session. There we just got our profit. But that was the trade. There was another trade on the Aussie USD at 730. Let's see how that one's working out. That one's still, looks like that one just broke out of the top as well during this last half hour. Look at the 5-minute chart. There's where I drew the wedge. We had the alert. It was a descending wedge. I looked for the pivot low, pivot high, the most significant one, and I looked for a higher low and a lower high. This is right where we had, and this is where I drew the wedge, right by the alert. Came back up. Here it came up. It tested the wedge. That validates the wedge, or the top of the wedge. Came back down. Came back, closed above. Here's where my C was. Get a good hit on that. And so we didn't get to close above the C. This candle right here, we had to close above where this was, where the C was. That was the close. This would have been the entry. We've entered right on this candle. At the close of that candle. And let's see if we can end the spread. This is a 1.4 spread, so if we got it closed right here, it would probably have been filled about 1.4 above that, so it'd be 40, we'll call it 41.5. Our close would have been right about in there. And our target, I did not take this trade because I was doing the other one. Template would be here, 7 pips. Here's our target right up in there. We'll make this target 1. And we'll see if it gets there. If it does pull back, it could pull back and retest the wedge, but right now all of our moving averages on this one are all in alignment. We have a 5, these are all exponential moving averages. We have a 5, a 13, and then the 62. That's on the 5-minute. They're all moving in the right direction, going to the upside. And on our 15-minute chart, let's see what they're looking like there. Change this trend. Yes, 15. Change to this pattern. All of our moving averages here again are, we have the green, yellow, orange. That's the orange. The green and the yellow are always going to be green and yellow. They're always going to be the 5 and the 13. Yellow's going to be 13, green's going to be 5. And then the 62 changes color depending on which time frame we're on. If I'm on the 15-minute chart, it's going to be orange. You see all of our RSIs are in the right direction, pointing upward. All of our moving averages are in the right direction. And we'll see what happens. Let's see if it can. I did move this, the entry up that 1.5 pips, because if you pulled the trigger right on that 5-minute blue candle or that 1-minute blue candle, it would filled you about 1.5 pips away from where that price was. So you always have to make that up, and you're always down, usually 1.5 pips or 2 pips, whatever the spread is, you're always down as soon as you push the trigger. That's just the nature of the beast. And our stop would be, right now the stop is 7 pips. We may want to move that stop just a little. Sometimes I've been giving it a little bit more room than just the 7 pips to the downside, just to try and keep it out of harm's way. All of our RCS tool is showing the strength on the Aussie. Aussie is the first currency of the pair. The hour is the second. Aussie strength on the 15-minute. We want to try and take this to the upside.
Excuse me, Al?
Yes, Christine.
You have a question or a comment from
okay.
Sean? Has the market been a bit volatile? I am personally finding it challenging to make good entry.
It's been really tough these last couple of weeks. What I've been finding out is, and that's one reason I'm giving it a little bit more of a stop. You can get the entry, okay, but it gives you that you still have that 1.5 to 2 pip spread that you have to deal with. The problem I've been having quite a bit lately is getting that 7 pips. It goes up about 4 or 5 pips, comes back and retests because there just isn't the volume. I find certain days are better than others. I find Mondays are not very easy to. I find if I get stopped out, it's more if I take trades on Mondays, I tend to get stopped out more on a Monday than I do on any other day, because what's happening is that a lot of the larger institutions are taking their weekly positions on Monday, and then you'll start seeing some good moves on Tuesday. Wednesday, a lot of times it's a retracement day where it pulls back and they load up on their positions again. So I find Tuesdays and Thursdays are sometimes the best. Fridays, if you see where there was a big move on a particular pair during the week, you may start seeing some profit taking on Friday. Mondays are tough. Tuesdays I find to be probably my more successful days to trade. And then early morning hours, oftentimes between, unfortunately, we don't start this thing till 8 o'clock, but a lot of times I'm seeing good alerts that happen around 6:30, 7 o'clock. But a lot of times they don't really materialize until just before we open up. A lot of times I'm out of the trade just about by 8 o'clock. I'm getting out of that trade, or just a little bit after 8. And then again at 9:15, when the market starts to open up, you'll start seeing more volatility.
We just got an alert, Al, for the US yen.
Okay, let's see what we have here. Let's see. US yen, 8.15, descending. Okay, US yen's back in play again here. $8.15, looks like there's a little bit of a flag pattern going on right here, right now. 8.15, that's right here. And it was a descending wedge. And so we're going to be looking at, let's go on a 15-minute chart and see what it's looking like on the 15. So I'm going to take all this, I'm going to clean this one up. I'm going to keep the, I'll keep the original wedge on because a lot of times this is still in play. I'll take all this other stuff off here. I think the original wedge was probably a little bit stronger. But descending, so descending, so basically what we're looking at is putting the A up, probably, I'm going to say putting the A up right around in here because that's where it originated, where it broke. So I would be starting from here to here, tuck it in as, boy, this is a tough one. Yeah, I don't like that. Actually, I like the original wedge a lot better and bring it to a smaller time frame. Get this out of the way. A lot of times you'll see what happens when you have once the bigger wedge is broken, it'll start forming other wedges. And right now I'm seeing a little bit of formation here. We have like an inside candle, strong move down. Here's a little wick over wick area. So I'm going to mark that off. This is going to look like it just to be more, this wedge alert seems like it's more just a continuation of what this bigger move was originally. I'm not sure what the algorithm's looking at. There's a little wick over wick. Let's go to a lower time frame chart and see if we can make some sense out of this. So with this, I would have to draw, it said it was a descending wedge. I would be looking at a flat top, because this thing still has some pressure to the downside possibly. I'm not seeing any upward move here, so I'm just going to be looking at, take it to the top where the top of this wick was, take it down to the bottom. Bring it back up to put a straight top across the AC line, and then bring this down to, I'm just going to flatten this one out as well, just bring it up just a little bit. This is really the box range that is trading right now. It came down, it did have, I do like this point right here. Still want to keep that C flat and then bring this over, and I'll probably bring this D over like this. That's about the best I can do with this one. This one doesn't, I can't justify drawing it all the way from top to the bottom here. Unless I just don't see unless we were to maybe do something like this. I don't know. This one I don't really like this one too well. This is the new area that it's playing in, but right now it's making new lows. So there's really nothing here to. I can't make any heads or tails of this one. I wouldn't take this. Right now, this thing is basically you would be looking at pullbacks, and this thing could keep on going. And maybe that's what the alert was trying to signify, that you really had a range here. Came back up, retested this 13 moving average, and now it's breaking out of the range. So this is more of a continue. This thing could go on for quite a while. Looking to see where the target of this thing would be. I'm going to go to a higher time frame and see if I can find something over here to the left of the chart that would give me a reason for where this thing's going to bounce from. So I'm going to go to I'm going to start with a 1 hour chart and see if I can find anything. There's nothing for the last 1, 2, 3, 4 days, nothing there. Go to a daily chart, and then we can find something here. And what I'd be looking at right now would be, I'd be looking at where the price is right now. You see all these wicks. I come over here and see that I would put my target right about at the end of this wick. And if this breaks, this is clear sailing all the way down to this level here. When I say clear sailing from a daily perspective, there's nothing in here that shows any pullback from where it left this area, came all the way up, came back down, retested this. And they found some buyers coming in right around in this area. And if you were to look at a lower time frame chart on this, scroll on over, you'll probably find that there was some basing or something in here. This would be basically, that's just the low of this. This is between these blue vertical lines, or that's a daily. And this is a 1 hour chart within the daily range. So it started here, came all the way up, came back down, broke all these areas right here. Here's a drop, base, drop. It came back, retested this area, wicked above, came back, retested this part. So here's at the bottom of this wick. So I look at these as wick areas as where the buyers or sellers are coming in. And then if it breaks this area, it's coming down to this area, this one down here. This is on a 1 hour chart. This is probably about as good as it's going to get right now as far as as we're looking at 7 pip moves. Let's see. But if it basically, so what we're looking at on this case, we're looking all the way over here. This is what this room is about too, is we try to give you some idea about price action analysis, trying to figure out where targets are, not just play the alerts. I mean, the alerts are important, and don't get me wrong. We're trying to find out where the reasonable target's going to be to where our expectations are for entries. And let's see, this is on a 5. We'll make this one, should be our 15-minute chart. So we have a blue 15-minute line. This is a significant line right here that's going to have to, you may expect a bounce off of this. If I get this onto a 15-minute chart. This line, this green and blue, right now, those are 63 pips apart, I believe. If I take the bags to me, about half of that. This is the yen pair. 32, 34 pips. But I would expect a bounce in here. And if it can break this, then the next area is coming back down is to, and you can see where you have the blue. Here's a fib line, which is right about half. And here's the other area where we're talking about. This is where price gets to be. This is why this tool is so valuable. It's because it tells you certain price points where the institutions are going to be. And you can see where we drew this line of if this breaks, it would come all the way down. This is where it started coming back into play. This would basically be the next demand zone down there. Just gonna have to get through this first. Any questions? But right now, I don't see where we can. I don't know where to get in with this. I'd have to see a stronger pullback, maybe back to the bottom of the wedge, and then maybe be looking at another formation to be able to get in. But I don't see anything that's really conclusive that I would want to draw a wedge on this from where this alert came in. Now the alert did come in. If you were to remove this wedge, just pretend this one wasn't even there, then I would be looking at this for a high, this for a low, trying to tuck it in, and maybe that's what it was looking at. It was a descending wedge. It'll start here at the high. I'm looking for a pivot high, looking for a pivot low before the wedge. And it would say it was descending, so I'd go from here to here, bring my C in over here, and then tuck this in down to the bottom of the wedge. Move this, get to a 15-minute chart, or a smaller time frame chart.
Question for you, Al.
Yes.
The existing candle right now, is that the 815 candle still forming?
This is the 815 candle opened where this line is. That candle that is sitting on that line, that is the open of that candle.
I'm just like on the 15-minute chart. The reason I'm asking is that once it forms, would that form the new bottom, if you know what I mean?
By that time, I always look at that the alert was based on everything prior to. In other words, everything prior to this red candle here. The alert was based on everything prior to that. So I can't now. After this candle forms, I can maybe tweak it, especially if it comes back up into the wedge. Like right now, it's broken the bottom of our wedge. But when this alert happened, this candle was sitting right off of this. This was the open. This was when that happened. The price was right at that blue line when the alert happened. So this one closed. This candle opened up right here. It set the alert. This candle wasn't formed yet. So that's why I usually tuck it in just before. Then I have to wait to see what happens. Now, in this particular case, it looks like this thing is just, well, if we go back to our 1-minute chart, here's where our this is as close as it came before the alert. Right here is where the candle, actually here is the alert. It came down a little bit, didn't take this, came all the way up here. Then here is the break. And actually, this is probably what we should be looking at. But so here would be the close. This would have been the entry right here. This is 39, 36. You're still 3 pips away. But this would have been the entry that I've been looking at that I drawn this at the time. Because we had the alert. Here's a candle. It came back all the way deeper into the wedge. Here was the pullback. And this is actually the top of the wedge. Now we may be able to tweak this thing over here a little bit more. You really can't do that unless you were to violate all these from where the A is. I don't know if we can move the A here. I'll see that may have worked. That would have tightened it up. That would have tightened the wedge up a little bit. That would brought it down just a little bit from that level. It sort of shallows out the angle a little bit. One thing I'd be real careful with is at this point in time, that since it has such a nice move down, I'd be looking for, let's see, I'm gonna go to the 5-minute range here. Like I said, on the US yen, you can, these fib lines are about half of what they are on the US Aussie and US Euro pairs. Another alert that just came in. Let's see what that one is. US CAD 830. Oh, there we go. This one, this Aussie took off, hit the target on that one. Can't catch them all. You can only watch so many at a time, but that would have worked as well. Let's see, the Aussie CAD or US CAD. Let's see where that is. And the US CAD says it's ascending at 830. Ascending. So we draw 15-minute chart. There we go. $830 ascending. So we went, it looks like it's already breaking out. Lots of movement right here at 8:30 this morning. So ascending, so here would be, I'd be looking at starting from the low to the high. I probably tuck it in right about here. Look at this candle, come in, tuck it in as close to the wedge as I could. Let's see. Bring the D up here. I gotta bring the A over, find something over here for the A, or just flatten it out. What's 8:30, I believe. 8:30 ascending. To me, it looks like it's already broke. When it got the alert, it already broke the level that I've been looking at. Looks like it was a little bit slow in getting the alert. Well, the thing is that it alerts at 15-minute increments. Looking at our lower time frame. This might give us another chance to get in this thing, possibly. Now, the way I see this thing broke before we ever got the alert. And again, if you get these alerts and they just can't draw them right, or they just can't, they don't fit, then just go to the next one. I say, if anything, I could draw it to here, knowing it's already broken, wait for it to come back and retest that area. So here's an anchor, here's a hit, broke through, came back and retested it. Retested the trend. I could probably pull this one down a little bit lower. But then it's no longer ascending. And there's really nothing over to the left of the chart to, I'd have to go back several days probably. Oops, what happened there? My computer's locking up here on me.
Al, while you're working on that, can I throw another question at you?
Sure.
Okay. Rashawn wanted to know if, is there a group that shares ideas, wedge diagrams, and then when they make entries and so forth? So we thought here, University, Telegram. Do you have any other?
I don't know of any other groups than basically us. I know that, I mean, Susan Batchelder has her sessions on Wednesdays. Camille has a session. I'm sure what times hers was in Spanish, so I never listened to that because I don't understand Spanish. But as far as groups go, this is pretty much the only group that I know of that that shares this stuff and does what we do.
I think what Rashawn was asking, and correct me if I'm wrong, Rashawn, is that the attendees, like for example, he'd like to be able to possibly share his diagrams and maybe get critiques, that type of thing.
Well, you can always telegram Matt or myself in the Telegram. It's under Al Mittman, A-L space M-I-T-M-A-N. We can put that in the chat. And I think you can just telegram me directly. And if you have a chart that you want to show and get a comment on it, I can do that. We have a few people that do that. They take a snapshot of their wedges and ask for a comment on it. We'll do that for you. But just do it through the Telegram channel is probably the best way. And I think if you just do a search for AL, I'll just type it in the chat box here. I can find the chat box. Chat box. I don't see my chat box. Oh, there it is. And I'll just type it in for, let's see, all panels and attendees. I think if you just type in, I think if you just type this into the search box for the Telegram, you should be able to pull me up and then just message me. You can try that. And if that doesn't work, we'll figure out how to make that happen. And let's see here. We have a little bit of pullback. Let's try and see if we can make some. That's the way I'm going to draw the wedge. And if it comes back up and retest it, fine. If it doesn't, then we're just not going to be able to pull this one off. We go into 1 minute chart. Try and tuck this in as tight as we can and still maintain a I think we probably do that one. So if I take it down here, that's going to put us into a descending, and I'm just going to pretty much level this thing off as best I can. Probably right to, I'm going to go to this area right in there. This will be the bottom of the wedge. Let's see how much came down here from where the alert was. See, that's only 2 pips, so that's good. So I can use that. And this may have actually saved us some problems here because it's coming back into the wedge. Move my D over. Now we do have a nice little trend coming down from this direction. I won't draw the wedge with this type of a slope, but I will put a trend line as it's coming down so that if it breaks this, if it breaks this trend line, comes back up and retests the wedge, or if it can't break below this, we have 2 trend lines going on here. A strong one coming down, and this is a little bit of a wedge right in this area right here. Kind of like this, actually. Flatten it out to the top. Touches in on the bottom. Let's see how high this will go. I'll flatten this out to the top right here. Just bring these both back together. And see, we have a little bit, I can even take it up a little bit higher there. Now, if they were going to call a descending wedge, if they wanted to do it on that, if they called it, let's say it was ascending, so we still want a flat top on this. Let's see. If it breaks the top of this, it still has this wick to go. So I'm going to use that wick. Remember I said I like to have the wick, hit a wick all the way until I stop, till the wick, top of the wick hits the body of a candle, and then that's where the next area is going to be. So I want to see it break and close above this point before I would take it long. And so I'm just going to move this out all the way, put a flat top on that, and have a little trend line going on here. So here's we actually have a little trend going right in this direction. And this is where this could actually be an early move for the break to the upside. Because here's still where the main wedge was, where we initially drew. So if it breaks the top here, it's got all the way up to here to go for a target. But I would want to see it break. I want to see it break and close above this AC line. Let's see where I'm moving at, how some of our other indicators that may help us out here. Let me get the other one up. Let's see, we need this one. So we'll try a 5-minute chart and see what we have here, if we can tune it up a little bit on this. We have our whole moving out. Let's see where RSI, RCS is on these. Now, the US CAD is not my favorite pair, although it actually has been trading fairly well here lately for me. the CAD is fairly, right now the CAD and the US dollar are fighting for last place. So there's not a lot of strength reference to either one. If we look at our correlation tools that we have, this is that RCS tool, you know, on a higher time frame. Let's see how the US dollar is and what time frames with the other currencies. And you can see that on the 4-hour chart, right now the Aussie is the strongest, the dollar is the weakest. On the 30-minute chart, the New Zealand is the strongest, Aussie, Euro, they're the top three, dollar is still the weakest, dollar is still the weakest, dollar. So right now, you don't want to be trading to the favor of the dollar, because the dollar is the weakest of all the 8 currencies. The dollar is the weakest of all of them in all 4 time frames. The CAD is fighting for last place with the dollar. So this is not a really good, I wouldn't call this a real strong trade right now. It may develop into one later, but for right now, I'd stay away from this trade. I don't think there's going to be enough volume and enough strength to the CAD to make it a worthwhile trade for me. I'd stay away from this one. I would want to see it, I would want to see the CAD get a lot weaker to the dollar, or a lot stronger to the dollar, which means going to the downside. If it breaks this and we can start getting some strength over here, then it might be worth taking the trade. But right now, I think I'd just stay away from this one. Maybe about 9:30 when the US market opens up, that may change a little bit. Right now, I'm not a fan of it. And having said that, let's see what else we have going on here. US yen, we still have the US yen play to see how that's doing. You see where it came all the way down. Like we did have a, let's see, it was 8.15. Was that the last alert we had on that one? Yeah, 8.15 was the last alert we had. So that was this one. This one's sort of, here was where the breakout was, came back in. It's actually looking to break out again. And if you can see this, you could have, you see how, here's the major move was down, came back up, is actually forming another little wedge right in here. But what I would be concerned about is that it's starting to actually maybe go to break to the upside. Starting to see a little bit of a harmonic in here, which is a whole nother story. If I go from it to a, let me go to a 5-minute chart. It makes it a little bit easier. The 1-minute chart can be a little bit whipsaw you a lot. I like this move, this C down to D, where this thing broke. You know, so as far as I'm concerned, right now I'm out of this trade. So I'm looking to see if there's a possibility to re-enter the trade. We still want to respect the fact that here's the D. It's going to have to break. This is a look. This is a. If you look at the price action on this, we have a high, a low. This A is a lower high. This is a higher low, lower high, higher low, lower high, and then it broke this area right here. So this is a significant price. So that you can see that actually have a little bit of a wedge all the way. If I take this from this angle all the way through here to up here, this actually broke. So this trend line is actually forming a trend line to the upside. but it's being respected of that. If it breaks, then we're going to be looking at going to the upside. But right now, I'm not seeing anything that's telling me to take this thing. Especially now the yen on the 5 minute, that's only a 2-point spread on that. Dollar is still the weakest, but the yen's given up a lot of its strength on this time period. Let's look at it on the 15 minute.
When you said if it breaks, you mean if it breaks that trend line BC, right?
Yeah, the BC, basically, it is sort of I mean, it's already broken it, but it would have to come up, basically, by the time this price gets all the way over here to come up and challenge it, we're basically still looking at the AC line to be broken. This was the indication that to probably take this thing short once this first wedge was built. And
right.
The first wedge we had over here. This is where the wedge was. And we had the trend line kind of going from, well, this was sort of a flat wedge right in here. Once this candle came down and broke it and retested it, that's an inner wedge type of situation. Here's where let me get this out of the way. The D was actually right up here. So the main wedge was broken, but if this thing can't come down any lower and gets up into the wedge, we're still looking for it to break out to the upside. But by that time, we'd be looking at maybe another possible trend line to follow it up. But right now, we don't have a trade.
Correct.
Not that I see. I mean, we have right now it's basically basing. And on the 15-minute chart, let's see where our prices are. We have a price down here that would be of interest. And this line was drawn over there for a reason, all the way there. So this would be a price point target on a 15-minute chart. And we had a nice little break here. Let's see, how much did we get on this? On the break. That's only 3 pips from there. Oh, really? 5 pips. Yeah, this is the one that we took earlier, right when the session opened. Oh wait, no, there was one at 8 o'clock, I believe, or 7:30. That's the one we were looking at. That one, yeah, 7 o'clock. So this is the new one, the 8:15 one. So this was the 7 o'clock wedge over here that we drew over here. I take that back. We redrew this. It was 8 o'clock or 7:15. It's over. This was where the original wedge was. This is the one that we took and we made basically made our daily bread on this one right here. And that's the one that we were saying here's like this one broke. So this is where it broke. We took our profits. We got in and out. Now we're trying to decide what to do with this thing. And we have the B. The B got broken. And now it's back up into, and this is where the wedge alert was. So if I were drawing the wedge on this, I'd be drawing it from the bottoms of these candles down to here. I'd have to take it back up to the top and see what it does. But I just don't like it. Just don't like it. Not after that big move like that. Right now, I'd have to wait to see what happens maybe after 9 or 9:30 to see what we would do with that. And we make it another alert at 9 o'clock. But I do like this trend line, this BD trend line. Here's where it got broken. So I would want to put my A's pretty much right over top of that D. Flatten my C out to see if it breaks to the top. Find the bottom of, and just do it in this direction. See what happens with that. That'd be my best suggestion on this. So basically I have a AC flat line, the B's got a slight slope to it. I just put my D right there. I don't have a place to put my D right now, so I'm just putting it underneath my C somewhere. Because I want to see a little bit more price action in here. Maybe I'll find it on the 5-minute chart. Or 1 minute. Let's see what we have on a 1 minute. You see how the moving averages are now crossing, so it is breaking up to the upside. So with that, I'll move my B over here. If we find that D. Just tighten this, just tighten all these up a little bit closer. I'm just going to flatline this. I'd like to see it close above, but if it closes above, it's going to be tagging right in the bottom of the original wedge. So even if it breaks the top of this, I still want to see it respect the bottom of the first wedge. This will be just a big move down, come back up and retest it. Right now our C is there. We had a nice little red wick. And we'll see what it does. Remember, so this first trend line, this is where it broke the first trend line right in here. So this is a significant area. This is where I put the A and D. That's a significant area. So I'm going to mark that. Now I like to see it close above that before I would take it long. And even then, you're still looking at bumping into this part right in here. That's 55 to 50. That's only 5 pip range in there. So again, I just stay away from this one. Let's see how our range is doing here. Now the dollar's flipped. The dollar's gotten stronger on the 1 minute chart. Let's see what it does on the. Now if the dollar starts getting stronger across the board, then we may have something then. Still fighting for last place on the 15. The dollar's gotten stronger to the end, stronger on the 6 minute, on the 1 minute chart. I want to see at least, I'd least have to see at least three point spread on the 5 minute before I would take this thing long. Let's focus on our 5 minute chart. We got our 62 moving average coming right into play, and right now it's testing that. I think you're going to see a bounce off of. Now let's see. You probably see a bounce off the 62, probably right about where the wedge is. Let me just move this out of the way so we can see the price action a little bit. So right now we're just starting to get across of the 5 and 13 moving average. Looks like it's going to want to come up and retest, which is basically the bottom. We've got, this is what we talk about rebar, where we have a wall that's being built. We have a wall, we have the flat line of the AC line. It's got to close above that. It has to close above the 62. And it has to close above the top wedge. So it's got the wedge, the 62, and the flat line. If it comes up into this area, it might actually be a good shorting opportunity depending on how everything else is looking, because it's going to lose a lot of steam getting through this, lose more steam getting through that. It's like a jackhammer trying to get through a wall. And it's going to have a hard time getting, and once it breaks through that, if it can break through all of that, then you have the top side of the main wedge that we first drew up back from 7:15 this morning. It's got to get through that. So you got this, 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 this. That's a lot of area for it to struggle to get through before it's going to break to the upside. And the fact that the dollar has been so weak with all the other currencies, I would be looking at this being the more of a shorting opportunity. But I'm not seeing anything that I'd want to take a short on right now.
Al?
Yes.
Have you been able to figure out how to allow others to screen share? Because I have my wedge drawn slightly differently on this pair.
Oh, let me see if I can, let's try it again here. I'm going to stop sharing. And, or, let's see, participants.
It should be in the settings there somewhere.
I would think so.
That allows screen sharing.
If I did see if I make you co-host, you want to try that?
Okay, cool.
Can you do that now?
Yeah.
Oh, good. That did it, huh?
Yeah, good,
Okay.
Ada.
So this is how I drew my wedge.
Off the last alert?
Yeah.
Okay.
So well, as you can see, I took, this is tweaked after on the 1 minute though. So
Okay.
I originally started up here, but of course it wasn't going to hit. So it was going to break right through the other candles. So I started up here, went back to the low point, being as the low and the high, and I follow what you do. So with the C, I brought it to the next highest point, because if I brought it lower, of course, it was going to cut across the candles again.
Right.
Then I just kind of put the D, once this 15-minute finally formed, I kind of lined up the D with the bottom of this candle, but I think there's a wee bit of a wick there that I could still kind of tweak it a little bit better.
And that's right on the alert line, right? That's close of the alert line. Okay.
That's right. That's right. Because I couldn't tuck it in anywhere else. So mine wedged this way is looking to break out the top like any time now, really.
Right. And that's and you're helping to clarify a point that I was trying to make before, is that when we get the alert, I try not to use the live candle of the alert where the alert was. Once that candle forms, once that 15-minute or 5-minute candle forms, then I'm okay with go ahead and moving that D, in this case, moving that D down. The original alert said it was an ascending wedge, I believe, or was this one a descending?
I think it's descending.
Okay, this one was descending, yeah. So
maybe the original was, but I'm just going strictly by the most current one. So yeah, I don't even take into account what happened.
And I agree with that, because I mean, even though the alert says ascending or descending, sometimes it just doesn't seem to make sense. Because the candle's not formed, and you just have to kind of sometimes you have to wait till the candle forms and then reevaluate what it's doing. Because it's an algorithm. It can only do so much at such a point in time, but it doesn't know what it's going to be doing as the alert happens. And oftentimes you'll see where you'll get a strong move down, but that's nothing more than more of a it could be the whipsaw, it could be where they're searching for stops, it could be a whole lot of other things. And to think that this thing's going to be moving more towards the upside, I don't think it's totally out of the question based on some of the RSIs that we see and the some of the other indicators that we're using. So yeah, actually, I think that's a good wedge there, Eva. Thanks for bringing that to
Okay.
pointing that
I
out.
just want to, okay, so like there's the 1 minute.
Yeah, here's a break. Here's starting to break out right now.
Yeah, yeah.
I
So
see.
Do you want to take it from here? Do you want to
No.
do your analysis on this one?
because I can't do the 1 minute chart like you do. I
Okay.
always end up getting in at the wrong time and I mess myself up every single time. So, and I can't even do the 5 minute. I still stick to the 15 because it's more of a confirmation for me because I'm not
Okay.
as experienced at it as you are.
And there's nothing wrong with that at all. In fact, right now we did get a 5 minute candle close outside that wedge that you drew, and you're getting some good. Now, what you may want to do is, well, I'm not sure. It's hard to see where. Say, let me go and take the charts back.
Okay.
And
I'll stop sharing.
Nice,
you
Eva.
stop sharing. Yeah, thank you, Eva.
Oh, you guys are welcome.
To continue, yes. And we want to share that one. Everybody sees my chart okay?
Yes.
And so here on the 5 minute, it did break out. Now now here's where it's varying a little bit differently is that it did break out of the top of this one, which is where Eva had this slope coming down. Mine just came up, and now yours 5 minute candle closed. Mine closed right at the 62 moving average, and now it's looking to test the bottom of the original wedge that we had back at 7:15 this morning. So again, I'm not going to be in a hurry to take this trade. Now, if it comes back and pulls back and retests this, it may just start basing in between the wedge, the first wedge, which I'm going to put this in as the, so I can make this a little bit thicker, just so we can distinguish between the two.
And I think, you know what, Al, I think with, in my case where I use the 15 minute, it's already gone through all this up and down and retesting. So I think my head's not there to watch it do the retesting. And now do I get it? Like, I can't decide yet because I'm not, like I said, I'm not as experienced at it as you are. So I find the 15 minute, it's gone through all this stuff without it messing up my head. So when the second candle opens and it's still showing as green in this case, then I'll get into it. And that's just because I'm not confident enough yet to use the smaller time frame.
And are you using the same stop value of 7 pips, 7 to 10 pips?
Yes. Yep. I do everything exactly like you, except I have to trade the 15 minute chart because I always mess up my entries. And when I get out on the smaller time frames, because it just plays with my mind too much. I haven't controlled that yet.
Well, you know, and that's a valid observation that you need to. One thing I'm looking at right now here, this candle right here, this was at 7:30 close. This candle opened at 7:30. This red candle that I'm on right now, which would be probably your 15-minute reference candle.
Yeah. Yeah, I guess it would be, right?
Yeah. But the only thing that's really different there, and I do like using those, especially if I can get a nice reference candle on the 15, on that, right on the chart. This looks to me like a good area to possibly be looking to be able to take it short. I'm seeing because we got this area again. This is all the rebar we have. We have the top of this. We have this candle, this zone on the candle. We have the bottom of the wedge, which is coming back to retest the wedge again. This is basically a nice little move down, coming back, retesting the wedge. This thing could come down and just give us one a really nice run, or it could start. This might be the bottom of breaking out to the upside.
Yeah.
We don't really know. I do know, though, that there's a fib line right here, a 5-minute fib line, which would be the equivalent to a blue 2-minute line right up here, right on the other side of the wedge. And if we're looking at this range right here between the green and the next blue, this is about 12 pips. Take this off. And we'll see what happens with this. This is where that wedge alert happened. It might be about to put this, if this was a descending wedge. See what that was. Let me just double check that. Ascending at 8:30, ascending. That's why I have such a hard time drawing it. Now I'm seeing it being more ascending, where have an A here, put a B up here with the, tuck in with the D, tuck my C, and then adjust this to the top of the old wedge.
The only downside I see about the way I do it with the 15-minute is by the time the second 15-minute candle starts to form, I could be missing out on about 3 or 4 pips already entry wise.
Yeah,
But
that's very true.
yeah, but I still have to do it that way because for now, until I get better and better at it, just for that reason, because it just plays with my brain.
Well, I think that one thing about it, the 1 minute will really play with your brain. The 5 minute kind of plays with it a little bit, and the 15-minute, but each time you go to a higher level, you're looking at bigger price moves per candle wick. And actually, if you put the ATR on, but let me just do that. ATR on the, let's see. The average true range on our 5 minute chart, the average true range is going to be 5 pips. Let's slide this down here. We've got 5 pips as the average true range on the 5 minute, and on the 15-minute chart, let's see what the average true range on this one is. And this is 7 pips. So it's pretty. And that's been pretty standard on this pair, has been pretty standard for the last couple of days, about 7 pips on a 15-minute chart. So that's, I guess, is something to think about. One thing I like about this on the 15 right now is you have a nice red candle and you have an inside. All these blue candles are inside the body of this red candle. So the last 15 minutes, each one of these 15-minute candles have probably been, let's see what the range of those are. Here's a range of this to the bottom of here. And this red candle was twice the average true range. And you have 3, right now you have 3 blue candles inside this red one. This is a significant area right there in the wicked up. I thought I had 2 15-minute charts up.
You do.
There we go. Now I do. And my 1 minute up here. I'd like to see these moving averages get back in the right direction on the 1 minute chart before I would take it short.
Michael would like to know the setting on the ATR, please. The length setting.
Oh, 14. It's a 14 period.
Thank you.
I'll tell you, it's 9:15. And let's take a break and be ready to come back here by, I say, give 5 minutes before the U.S. market opens, and then we'll let's see how that takes off.
Okay, sounds good.
So we're going to pause the, yes, he's going to stop sharing, change my screen, see if I can find the splash page.
Michael's question, your length setting on the ATR, is it 14, Al?
Yes,
Yeah.
14, 1-4.
Okay.
And we're on break. Everybody get a cup of coffee and be ready for the U.S. market to open.
We'll be back.
And are we back? And are we back? Is everybody there?
Morning.
Okay, good. All right.
Here, sorry.
Well, it did look like, it seemed like with the US yen we're looking at here, it came right up into that area that we were talking about even. And we see that it came back and pulled right back down. Now it pulled back and broke below this secondary trend line that was we drew, the secondary wedge that we drew based on the 815 alert.
Mhm.
So just as this thing broke down, here's where I would have liked to have gotten in. I did take this trade short, and it looks like it's still valid for a short. The yen is showing some strength to the downside, and so we'll see what happens. I'm not going to give this thing a lot of room, but I would say that if I allow it to come on up to, we have the moving averages on our 1 minute chart are crossed over, and right now everything's moving in the right direction, and we'll see if it breaks. We had nice pull back up, came back down, crossed, give us some moving average crossovers on the 1 minute, and now we'll see if it will follow the nice little trend coming on down.
Okay, Al, where'd you get in again, please?
I got in right at the, I put a buy stop or sell stop in right at this level right here, which this candle was pulled up, this blue candle,
Right.
at a buy stop right at the bottom here, and this candle here brought me in, filled it,
Okay.
and then it pulled back up. So right now, this is where we are right now, and we'll
Just
see.
about at the fib line, right?
Just right about the fib line. Yep, right
Okay.
at the fib line,
Which is just touched.
which is now
Right.
breaking through.
Thank you.
And so this is our 1 minute fib line. We should have a blue fib line down here. So this would be here's our 7 pip target. So we got in at a nice spot. We'll see if we can get our 7 pips out of this thing. A lot of times you just see the 1 minute, it doesn't give you a whole lot of range oftentimes, but when you see that you're tracking it down and you get that flip over where they actually start flip going the other direction, that's not a bad time to be getting out of the trade, or same token as once you get everything moving in the right direction to get into the trade, and then just go for your 5 or 7 pips. And you see here on the RSIs on the 1 minute chart, you see the RSI, we had a nice little, came all the way up to the top. This is right where we had this, and that's what I was looking for. It was seeing that coming in up the top. I hesitated because it still had some room to the upside, but you got up to the 89, hooked back, came back, didn't quite make the 89, and then it broke, and now it came back and retested. It came back up and hooked above the 68. Now we'll just see if we can get enough room out of this thing to. You see where it's making lower highs, lower highs, lower highs. As long as it can not hook back up before we hit our target, we're okay. So right now I'll be using this area right here as I said, I would have liked to have gotten in on this candle. I just wasn't here in time to do that. But once this blue candle started forming, then I put a sell stop at the bottom of this, at the bottom of the blue, and they came in, filled me, and then we'll see what happens here. Nice strong move down. We have our B target right down there. Our B level is right here. Here's where the red candle got broken on the way up to this area here. So I'm going to be looking, if it bounces off of this, I might just take my profits and be done with it. This would be the second trade of the day. I'd like to see it get down and take that. Remember, it's got to go through. We have spread 1.3 spread, so it's got to come through this 1.3 in order to take that target. And I'm out. Oops, no,
How
I'm
many
not out.
pips did you get, Al?
What's that?
How many pips did you end up getting on that one?
Well, actually, I closed out my target rather than my. I forgot.
Oh,
Close out.
okay.
Now I'm going to close it out. There we go. Let's see. Let's see if I can figure out what my pip target on that was. And let's see, account summary.
Oh, you got like a dozen, right? Am I reading that right?
No, that's, well, I'm hard trying to read this. I haven't quite mastered this simples list here.
No, it looks like you closed out at 105.50 and you got in at 105.38.
Well, there we go. Yep. So that would be, see order filled at, no, that's a buy. I want the sell order.
So 11.1.
Yeah, something, I don't know.
Let me see, but that's a good question. Let me see if I can figure this one out here. This was.
Wouldn't it be 11.1?
Well, I was just rounding. I wasn't getting that technical.
I mean, I don't know. Maybe my math's wrong. I need caffeine.
Okay, well, let's just say this.
You did well, Al. You did well.
Well, let's see. Let's just see if I can. I mean, I got to figure this one out. I haven't quite figured this deadline. Here we go. Short. We got in at. I got in right here, and I got out right about in. That's probably about 6.5 pips. I'm gonna say.
Yeah, how wrong I was.
About 6.5. And actually, if you're going for more, you can always go and just keep on tracking this yellow exponential moving average down, especially on the 5-minute chart. Let me X out of this. There we go. And we go to the 5-minute chart. You see where the yellow moving average, and this thing could, you see where it came back up. It head faked us over here with the 62. But if you go over here to the 15-minute chart, I'll bet you that 62 was still in play, wasn't touched. Here's a 62 and the 15. And right now it came in, it did challenge the yellow 13, but came right up into this zone, that's a perfect OTA supply zone. And right now it's tracking with the 62. Let me take this off now. So we don't need that anymore. It's tracking with the 13 exponential 62. So what I'm going to do is I'm going to put, actually, what I'm going to do, let me do this. I'm going to make this one a 1513. And we can come over here to our 5-minute chart. And we can just sort of track it along down with and see how far this thing will take it. This might be a nice little move right here. It has all the potentials of doing that. Remember, I think this is the one that we were saying that on the daily chart, we had to come all the way over here. You see where this was But here's our initial target, and if that breaks, we've got all this area down here before it's going to be tested again. So this is if this breaks here, it could go all the way down to here. But you'll probably get a bounce somewhere around in this area. So we make this one green. It's just
Excuse me, Al.
yeah.
Michael says, "Hey Al, the MRSI, is that the same double stacked RSIs from before with a different period? And also, how do I get a hull? Couldn't find one similar on TradingView HTF hull."
Well, the MRSI, that is, yeah, but yes, it's basically a 3-period. The blue one is a 3-period RSI. The orange is an 8-period RSI. And we just have them double stacked on one indicator. And then the whole moving average we have incorporated with that same indicator. So basically, you're getting all 3 time frame hulls. Well, on a 15-minute, you're going to get 1 whole moving average. On a 5-minute chart, you're going to get the 15 and the 5. And then the 1 minute, you're going to get the 15, 5, and 1 hull. And then the RSI reference to the chart that you're on. The hull, you should be able to find a hull. Let me see if I can find if I have a hull moving average. You can just get a regular hull moving average. I don't know if that's a hull suite or not. You could try the hull suite. I don't know if that's the, I think that's the free one. Try HULSUITE. Try that indicator and see if that's what it is. This one is this is the one that we're going to be packaging with the hulls and the RSIs all put together. You see right now where this green line, this was the bottom of the wicks of that daily chart that we were talking about, and it's right here at this 15-minute Fibonacci line. So this is going to be a fairly strong area for it to have to get through. So we were able to get our close to our 7. We probably did get our 7 pips out of that. I got 6.5. Yeah, let's see, it's 9:30. That was right at the market open that all happened. It started about 5 minutes before the market, U.S. market opened. And now we'll see what anything else new developed. Nothing yet. How's our CAD doing? Our CAD's trying to break out of the upside. Here's where I was saying too, is that we had this was a stronger wedge from, let's see, this was the wedge inside of a wedge, I believe is what we were looking at here. And see how this thing just ratcheted its way up, came up, tagged it, and came back and fell apart. And you can see, a lot of times too, if you're looking at these, especially on the 1 minute chart, but now we keep in mind the 1 minute chart, your average true range on your 1 minute chart is probably about 2 or 3 pips. I'm going to guess. Let me see what it is. Average true range on a 1 minute chart is 3 pips, and that is basically your spread. Double your spread is all that is. So you have to be careful when but this is where you can really fine tune though. If you can see where, like you see where this RSI came all the way up to the 89, and it came right on up, it broke through the wedge, didn't close into it. This one did close into it, but you also see where you have a little bit lower hump on the RSI. This would be a good indication that this may not, it may not fly as far as, and this might be a good area to possibly try to get in short. No, because one reason why I like having 3 hits on a trend line is because it gives me a point for it to break and another point for it to have to get through. And so if I draw my, and usually where my anchor is, in this case is where the B is. You know that it would have had to have gotten, now the question is from the D to the B, is there enough room to make it worth my while to take the shot at taking the trade? And if the B holds, doesn't hold, where's the next line of defense? And if I come over here, you'll see that from the top of the B, which is right here, you have a wick. So actually this could be an area because the B was just barely lower than that. This could be an area, and then right here is the top of the C before the next move. So this area is, they're going to find some problem getting through that area a little bit. You have a couple pivots that you have to get through, and then the question is, do you have enough room up here to take the trade? You've had 9 pips, so you could possibly get your target at that level. But you have to get through this. This is your area that you'd be this is your 7 pip area that you'd have to be looking at to be able to get through it. And you certainly can do it. It's just a question, it's just kind of a fight a little bit. But if you come up and you see where it's kind of struggling to get through there and it comes back down into the wedge, now you may be looking for another moving average crossover. Bring your wedge down here. Yeah, nice little trend line coming up. Now it broke. Now we're starting to get the moving average crossovers. Now this would be a real aggressive entry. This would be really aggressive. Now the question is, do you have ATR? Well, we don't need this anymore. So let me just take this off. I just want to use that as an illustration. And we had the peak. Now I want to see, before I would take this, I want to see all my moving averages. I want to get this 13 or this 1362 cross. We have a green fib line. We have the close. We have to pass it, come back up, check it, and then see. Right now it's in this range. This thing might just keep on going. One thing about wedges is, and one thing I've never been a real fan of breakout trades where things wait for it to just break out of an area, because a lot of times you get those head fakes. Now the question with the wedges is, and that's generally what we do. We do breakout trades off these wedges. Now the question is there a way of being able to use the range of the wedge itself to your advantage? And I'm still working on that, but I'm also seeing that when you get up and it breaks the top of the wedge, just like it did here, and your RSI is showing real strong, you want to make sure that you have the CAD in the right direction, and then you maybe will be able to take, once you get that hook on the RSI, to be able to get into it, to take it short. And then you only have to worry about a stop of just a couple pips to the stop in case it decides to take it out. And that's where these fib lines work out really well, is that if you get the crossover, it still could have gone on up and retested that a little bit closer, but when we had this formation, came back down, crossed over the 8, came back up, and couldn't make a new high off of, which is basically this candle. It couldn't make a new high with the strength. Then once you get to break below this candle, then you could possibly have taken it. But that's real aggressive. That's a real advanced type of thing to do. But you would be able to, what you'd be doing is you'd be looking to see that, okay, the cat's getting stronger. It broke through, couldn't really hold it, didn't give us the really good push to the upside. And it just failed, came back into the wedge, and then now you've got the crossovers. And now you could probably just be trying to find ways of pulling back to the yellow line. And the A would be your target in this case. This is where the move originated. So I did not take that. That would have been a possibility. I just didn't do it.
Hi, how are you?
And also here we see where it broke this trend line here. We had anchor, several hits, broke it. Here's our fib line. Had a little doji right in here. That's a drop. It's the base a little bit. And then if you would open, if you could have possibly gotten in, but I don't know if you would have gotten your range on it or not. That would have been, not sure. You would have gotten it. 16. Target would have been somewhere around, it looks like it probably would be working. So you got in there. 16, drop down 2 for 61, 659. Bill would have been right about in here. Let's see if it can get down to, could get a little bounce off of this one. Still red hulls, still well below the 13 moving average. Right now you still only be up a couple pips. And as this thing goes down, it's got to get through all these areas where it, now here, you might get a little bit of a bounce right in this area right here. Here's where the wick stopped, right on that one. Came back right into the zone, pushed back up. And we got this blue fib line right down below. So it's got to get through this little area, which I think it's going to do that. It's got a fair amount of strength to it. Cat's strong by 4. Yellow line held, yellow 13 held. There's a doji. targets just right down here. Remember, this is an area, this green line is an area that we determined was valuable right there off the A. And we have a lot more room down to the downside from some other areas. I think this is the one that we had some other areas way down below. Right now, if you were in this trade, you'd only be up 2 pips. Remember, that's if you got in right here at this doji area, because if you pulled the trigger on the doji when this thing came back up into the doji, when we had these crossover, your spread would have been about 1.5. Like I said, that's one reason why we shoot for 7 pips, to try and get that 5 pip profit, taking into consideration the spreads. Even though we're shooting for 7 pips, no, anything between 5 and 7 is a win. Always have to pay the dealer. Let's go to our 5-minute candle. Put our 5-minute Fibonacci lines on. So we got 1 blue line right here. That's at the 1355 area, which is pretty common. One thing I don't like about this trade is that if you look at where we had the alert, here was a pivot high, here was a pivot low, here was the alert candle, where the alert was, the alert opened all the way down here off of this. If you draw your range, this thing could just start being range bound. In this area.
You think it might be getting ready to possibly reverse?
Well, right now right now you've got it came a tag the top of the range. Right now I'm thinking it's pretty much it's hard right now just making well, that's an equal high, but here's a higher low, could come up, make a lower high, and it could just start wedging right in itself. If we hang our C up in this area, we pretty much flattened it out. Let's just even take the wedge off and just look at the overall range of this move. And you could here's where just a straight Fibonacci line can be very helpful. You see where it's range bound, and you see it came right down into the lower 25%, came up, tagged the upper 25. Now the thing is, if this thing comes back up, I'd be looking at a possibility that it's going to be staying in between, at least for a little while anyway, right in this area. In this area. It already came and tested this little box right here. Take this off. You see it's made a came down pivot. And now this candle closed above this. And we're on a 5-minute chart too. So we now have a pivot low, long wick. This red candle in itself was I would call it a little bit more of a neutral to bullish candle, because it started low, went lower, got pushed back. But if you look at the range of this candle, it closed above the midpoint of the candle. And then the next blue candle closed above the top of this. So right now this is a significant area that it's having to fight, and you can see we're starting to test the moving averages. If you look at it, there's a little thing that I learned very early on when I started trading, was you look at the 3 candle formations. You go, here's a high. Well, this candle, it was like, here's a high, here's a low, and a lower close to the mid-range of the candle. In other words, this candle closed below the halfway point of the candle. This one, low, lower low, lower close to the mid-range of the candle. This one closed, went lower, closed lower than the previous close, but still closed above the mid-range of this candle. In other words, like the close is more than halfway up of the distance of the candle. It's up more than halfway. Now we'll see if this thing can go. Right now you have an engulfing. If you look between this blue candle and this red candle, right now it's engulfing. It's forming its own little box, so to speak, your 3 candle formation. This is part of the price action analysis. So right now for these, in the last 15 minutes, it stayed within this range. This would be almost like a drop. It's basing. Now it's testing the bottom over here. This was the low candle before. When this area took off, this blue candle didn't close above the previous low. There was a low. There was a previous open of the low. Right here, you see that these 3 candles, it couldn't close above the top of the red candle. This one came up, wicked, came back, closed right at the same level. Now this one still closed within the wick. This was a significant candle right here. But this one did give you a higher close. This one just wicked you out. And right now it's trading inside this range. And this range is only between 62 and 57. You're only talking, again, you're talking 5 pips, which is the average true range on the 5-minute chart. And that's the 10 o'clock candle. This candle just opened at 10 o'clock, so right now this was the last 15-minute candle area. So that's one 15-minute candle right in this area like this, and it closed pretty much neutral. Now the question is, does it come down into this area? But here's still the bottom of your box. So even though it looked like it was going to be a good trade when everything crossed over, again, do you have the room to the downside? If it's going to stall within the 25% range of the top and bottom, do you really have the range? Or now you're looking at possible reversal. And that's where your moving averages or your RSIs will help to come into play. Take these fib lines off, clean up the chart a little bit. And actually, I'm going to take all these other lines off too. I'll keep that green one in. So it made a equal high. Right now it made a higher low. Now the question is, can it break through the top? And if it does, what's it going to run into? These are some of the reasons why you try to distinguish whether or not you want the trade's worth taking the trade or not. I like to always know where my pivot highs and pivot lows are previous to the alerts. Because generally speaking, it's going to be making lower highs and higher lows, or equal highs and higher lows in this case.
What time are we going till today?
We're going to 10:15 today. We have to be out. I think we have to be out of here by 10:15. So we have about 15 more minutes. Any other comments, questions? Feel free. Let's see what we got here today. Right now, we haven't had any alerts for the last couple hours, I don't think.
No, I think
It got real busy early this morning, and then it just kind of dried up a little bit. Yeah, we haven't had alerts since 8:30, so it's been an hour and a half since we've had an alert. But we had about 2 or 3 of them that were all of them seem to work out pretty well if we taken them all. I can't take them all, can't show them all, but especially while I'm trying to run these classes, it's hard to. If I can just get one good one, it's I'm happy with that.
Mm-hmm.
One thing that's always good to know is, and you'll be able to get this stuff eventually here, is see where the strong currencies are overall, see where the dollar is. The dollar is still, in the higher time frames, the dollar is still relatively weak. And right now, if we had an alert for the Euro US, you would want to be trading to the strength of the Euro because the dollar is still weak. And I prefer to be taking trades where I'm looking at the lower 3 versus the upper 3. I try and stay out of these middle 2, like the Swiss on this. I try and stay out of trading these 2 against each other, or these 2 against each other. But if like New Zealand alert came out, New Zealand to the U.S. of a 30-minute chart, I'd be trading initially I'd be looking at to the strength of the New Zealand dollar. And right now I just see this one as being range bound.
Seems to be, it pretty much has been going down or just sideways since last Friday, I guess it was.
Yeah.
Then all of a sudden the U.S. started to go a lot lower than the Canadian.
And one thing you can be looking at too, possibly, that may be worth noting is that from a other perspective, this kind of goes into a thing called Elliott waves, if anybody knows about Elliott waves. And that way you had a strong move down, and then you had a pullback. And so this would be, with the Elliott waves, they go in cycles of 5 to the impulse moves, which would be the strong up or strong downside. And then it retraces back three moves. But in this particular case, what I'm looking at with this, we had a strong move coming down. And in the Elliott wave fashion, you would have had, this would have been the bottom. Now, this would be like a wave possible. We don't know for sure yet. This could be a possible wave 1. This could be the wave 2, which as long as wave 2 doesn't break the bottom of wave 1, this move here should double. So in other words, the next move, which would be the 3-leg move, should go at least this length and then or more. And I'm thinking that's what this thing may start doing. So in other words, it would be, this is where a lot of times I pull this Fibonacci tool in, comes in here. This would be wave 1. This would be wave 2. And then wave 3's got to come up. Wave 3, if it's true Elliott wave, it's going to come up and test the, go at least to the 1-to-1 of this move. It looks like it could, then that's where this box would come into play. And if that's the leg 3, when it pulls back, it would be like wave 1, 2, 3, pulls back, 4, and then 5. And then when it retraces back, it goes A, B, C, and then comes back and retest it again. That's Elliott wave. That's a whole nother study. I don't trade Elliott wave, but I kind of look for the patterns, and this could be one of those patterns.
There's a nice big candle.
Yeah. And you've got a fib line right here, and you've got our little 1-to-1 target. Looks like we're going to get a break above top of the box.
Michael says that he uses the Elliott wave just to trade patterns as well for reversals. Otherwise, he says it's good to use for spot patterns, harmonics, etc.
Exactly. Yeah, I agree with that. Yeah, and this is kind of where there's a whole other study with harmonic scans, pitchforks. It all kind of goes in the same category, and so this could very well be. You can see where it came right on up. So this could be. This looks like the wave 3 of an Elliott wave. You had 5 waves coming up, 3 waves coming back. Test it. Didn't break the bottom. Came back up. This leg and this leg right now are the same. Leg 3 cannot be shorter than leg 1. Leg 2 cannot break the beginning origin of leg 1. And if we were to draw a pitchfork off this just gets into another little, this is a whole nother study. But you'd have an area here to here. And then you adjust your pitchfork so that it lines with the bottom of your leg here. And then the target would be the top of this, comes back, tests the middle of it, and then comes back up some more. You see that one right up in, I mean, you couldn't ask for that any more precise.
Perfect.
But these are some of the things as we get more and more into, as people become more and more familiar with what we do here, we'll start throwing some of this stuff into you. But right now we're trying to let everybody just sort of absorb the overall wedge patterns. And this helps us to understand where our targets can be when we do get these wedge patterns, where our targets can be, where our bounces can be. And this is all part of the technical analysis of trading, basically. See how it came right up? So the whole span. So this is, and now we could be looking at a bounce off of here. We have some other indicators as this thing pulls back to the midline of the pitchfork. you should be able to get a bounce off of here, but we're going to be looking for a move down with a hook. And that's where the 1 minute chart comes in handy. We came down, now we have the hook. Once this blue line crosses over the orange, I still like to see it bounce off the midline right here.
Look at that, US is finally getting stronger than the CAD.
Yeah. Well, it's the market opened. The US is taking its positions. And see where our fib lines are on this particular chart. Here's our red fib line right there, I believe. Here's a line coming down. Let's see how it bounces off at the middle of this. I'm looking for this thing to come down to the 80 to the 11 and hook a little bit. And there's got a little bit of a bounce. Here's our blue fib line. Here's our red fib line. This is what we call the pass and check. We'll see if it can pass it, check it, pass below, come back, come up, retest it. By that time, this thing should be pointed in the up direction. We have about 2 more minutes. Don't want to take it yet because this thing hasn't hooked over yet. Notice it broke out of the box, came in, it's coming back into the box again. Here's our hook. We can get a close above the median line of the pitchfork. We can get a close above the red line of our Fibonacci. Then it'd be worth taking the trade to shoot for the next blue line. Let's see, what is this?
They really are neck and neck, aren't they?
They really are.
Oh my goodness.
Let's see if I can get my... Should be able to take a trade on this. Why is it not taking me trade? Again, you want to see it hook. Now you see a bounce. Now, my concern right now is that my moving averages are starting to cross over. Where I had the nice push up, it may come down and retest the bottom of this lower 25%. It hasn't hooked and closed yet. Coming down to the 11. Have we get to the 11, hook, and then come back up again. See how it's respecting this part of the pitchfork.
Mm-hmm.
Which happens to be actually the lower 25% of the fork itself. Here's the upper 25%. Here's the mid-range where the center of the fork is, and here's the bottom 25%. So 25, 25, 25, 25. Looking for come down to the 11, give us a hook. Preferably have it cross the orange 8, and then give us a chance to enter the trade. And it may come all the way down to the bottom 25% of our original box. But the fact it broke to the upside makes me think this is a pullback to it. The CAD is still strong. Here's our green fib line. Now this is not a pitchfork type, this is not a wedge shell scenario. This is, the wedge is already done. Now we're looking at overall price action here. This is off the wedge alert. Here's a hook. It's not closed yet. Here's our blue fib line, right? No, see, that's not our fib. Here's our blue fib line. Here's our green fib line. Here's a past the median, past it. It's coming back up to recheck it. Here's our red line.
Well, I hate to say it, but we're gonna have to wrap up.
Yep, yeah, we are going to have to do that. Just, I get so involved with this, I hate to stop. 5-minute thread, here we go. But we got the hook. If we can get this thing to close above the fib line, close above the median line, we can take, I would be okay taking it long, but and then this would be your target up here. So having said that, check it out and see what you think. And glad everybody came. Hope everybody made a little bit of money today. We had a couple good trade opportunities. Hope you're able to capitalize on some of those, demo or live, either way. It's all a matter of learning and feeling comfortable what you're looking at. We're just trying to point those things out. So until tomorrow, everybody have a safe day and stay green. Thanks for being here. Thanks, Eva. Thanks, Christine.